All right, this is testing. I don't know if anybody can hear me or see me. Looks like it's coming online here. Cool. All right. I'll wait and see if anybody joins. Man, my computer is going like crazy. Maybe I have too much going on at once here. Let's see. Yeah, it's working. All right, let me go ahead and get started. I don't know if anybody's watching or will be watching, but this is kind of a whole experiment test anyway. So I owe everybody a market update video. I did not do one for May. And so this is that. I actually want to kind of move to doing live videos anyway. I figure it'd be kind of fun to be able to interact in real time. People can ask questions and we can just dialogue about what's going on. And that way it just kind of kills two birds with one stone. I can have a video that goes out there and also be able to interact live with people that maybe have questions about the market and where we're at. And if you are watching, jump on the chat, make yourself known if you can. If you have any questions, ask there. If there's anything wrong with the stream, let me know, because this is the first time I've ever done this. And I don't have the best internet at my house, so it may or may not stream very well. But regardless, we're here. So I'm going to go ahead and start, and I got to keep this window open somehow so I can monitor if there is any chat activity, which would be really cool if there was. All right, let me pull this over here. Awesome. So hopefully this is still working here. All right, so we're going to look at what happened in May, this past month, in the markets, and as we always do, take a look at where we might be going and just give my general take and thoughts on market direction. Not promising anything. This is not obviously investment advice or things that you should be doing tomorrow with your broker or your financial advisor. It's just informational, things to think about and look at as we make wise investment decisions together. That's the name of the game. So if we take a look at, we like to look at monthly candles, and they can kind of tell us more trend-wise where we're going, overall direction for the market. And so if you've watched these before, you know that I kind of look at three major ETFs, which if you don't know what an ETF is, it's basically an index fund that is tradable on most brokerages. So most people have heard of like the S&P 500 or the Dow Jones Industrial Average. These are just a collection of stocks based on some of the largest companies, Fortune 500 companies in the United States. And it's just a way to kind of track how the stock market's doing as a whole rather than going individually stock by stock and looking at every one by themselves. It's kind of is a total aggregate of everything. So the first one and the most important one we look at is SPY, which is the S&P 500 ETF index fund. And this is going to tell us where the 500 largest companies, publicly traded companies in the United States are at and where they're going. So we're going to be kind of going backwards a little bit here because we are in June right now and we're probably almost halfway through the month, so I'm really behind on this video. But let's go back to May and kind of look at where we left off. So if we rewind the clock back to April, you can see we had a really strong month here. Big green candle, which is great. You know, the S&P 500 was up. Look at this, almost 5.5%, which is a very strong month. Kind of broke out of a little bit of consolidation from the beginning of the year. We had a nice breakout in March, and then that uptrend continued in April. And in May, we kind of cooled off a little bit. We had another doji candle, which, just a reminder what a doji is. Doji has a wick and then a really small body, and you can see there's almost imperceptible how big the body is on this candle, which means the month ended pretty much where it started. You know, when the month opened, we dropped down a little bit, didn't break the bottom or the low of the previous month's candle, and we actually broke out to a new all-time high, but then kind of settled back down. We didn't really go very far in May. That would be true of most of the indexes. And then now to start June, we're kind of in the same boat, but we're actually breaking it out, and we had hit some all-time highs at the end of the close of the market time last week. So continue to see strong signs here in the S&P 500. And if you are watching this, or you're maybe thinking about jumping on, I guess you wouldn't hear this if you're thinking about jumping on. You actually have to jump on. But jump in the chat if you have any questions as I'm going here. It doesn't have to be about the charts we're looking at. It could be about anything with finance, personal finance, stock market. Any questions you may have, I'd love to be able to talk to you about them. So jump on and let me know. So I'm going to keep going here. So nothing really major to note so far in the S&P 500. We just have, I'll remind you, a doji candle is what we would consider an indecision candle, meaning we haven't made a very clear sign of where we're going to be going from here. It could go continue on, or it could break down. And obviously so far, then the next month, we have not broken down. So we're still looking pretty bullish for the overall market. And let's go to QQQ, which is the NASDAQ. Again, NASDAQ is going to be our tech-heavy stocks. And I've got a bunch of crazy lines here on this chart because I've been charting the NASDAQ for a few months now, because I was looking for opportunities there when we kind of had our growth stock sell-off earlier this year. Correction would maybe be a better term for it. Because it was so overheated, it needed to come back down a little bit and correct. So, so I've got some lines here tracking that. You can see the month of, sorry, I'm in the wrong spot here. The month of May was actually a slightly red month for QQQ, although it kind of had a similar look as the SPY. It's a little bit more of a hammer candle than a doji, meaning hammer is, you see the little body of the hammer on top, and then the handle would be this long wick on the bottom. So again, we came down, but we hit support right on an important level here, and I'm actually going to go over this level here in a second on a different view. And then we recovered quite a bit in the month, and then we're kind of doing the same thing on QQQ, which is we are going green for the month and breaking into new highs, which is encouraging to see. I would imagine this trend continues, and I talked about this last month. I would see continued march up to some new resistance levels overhead and new all-time highs in that index, barring any news or anything crazy happening. And then IWM, which is the Russell, which is a small cap fund. So these are not your biggest companies or not your tech-heavy companies specifically. These are just kind of up-and-coming companies that are looking to grow and maybe one day join the S&P 500. But this is a lot of analysts refer to the Russell index as kind of the measurement for risk. When people have an appetite for risk, they are cool to invest in smaller companies because there's more risk there. But with more risk generally comes more reward if you're willing to stomach it out. The whole risk-reward ratio is why we make certain decisions and how we invest. So when the Russell is moving, people are feeling pretty confident in the U.S. economy and willing to take on some maybe outsized risk because they're interested in seeing how things can grow. And so the Russell had a breakout. You can see pretty clear here. This is the March panic and huge retreat, and then bounce back up. But the Russell didn't. While the S&P 500 and the NASDAQ were making new highs middle to end of last year, the Russell kind of stayed down. A lot of this is because they have retail stocks in them, and so a lot of the stay-at-home things were in the QQQs, and that was really helping the S&P 500. Russell was, a lot of cruise lines, a lot of retail shopping was in this index, so there was a lot of concerns that they were not going to open up anytime soon. But we hit vaccine news in November, and boom, breakout and off to new highs. So we have really been, we had a super strong run the beginning of the year, and now we are just kind of making this bull flag that's just now starting to break out. You can see this trend line down here. This is pretty clear upward resistance and then breakout, and we're just starting to see this. So we haven't hit like the all-time high from March yet. It was only a few months ago. So we might see if we test that, make a double top, come back down, or break out, break to new all-time highs. So that would be what I'd be watching in the IWM. Let me look at QQQ. And then real quick before I do that, I just want to mention again, if you happen to be watching, I don't know if anybody is, this is just kind of a test and experiment, but if you would in mind, jump in the chat on YouTube and let me know who you are, where you're watching from, and if you have any questions for me, I'd love to answer any of them. It can be about anything. I might not have an answer for anything, but you can ask any question you want, and I'd be happy to engage and talk about it. All right, so let me go back to the Qs here. You can see all these lines. I've been tracking this for a while. Let me switch to my daily chart. That's going to give us a little bit cleaner of a setup here. All right, so these lines are called, I've mentioned this in a previous video, Fibonacci extension lines. So who's Fibonacci and what does it mean? I don't have it in front of me who Fibonacci was, but this is something a tool that we use to predict based on previous trends. You can see a trend here. Once we break that trend, where we might be going, different levels that we can target and look for. And these are all, again, just support and resistance lines. So the chart tells the story, and it's pretty clean here. We have a clean breakout, gap, big jumps up here, jumps up, jump ups. I don't know what I'm trying to say right now. You know what I mean. This is moving higher, and we're hitting numbers, and we're hitting levels, and then we're consolidating, and then moving up from there. So this got all the way up to this 61.8% Fibonacci extension level, which was similar to a previous all-time high, a little higher than that, but this is a clear resistance. We've not been able to break this outlook. We've hit this line here, rejected, consolidated around the 50%, back up, tried again, boom, rejected. Now this is a somewhat bearish pattern because we have a clear double top that we cannot break out from. So what do? We come down a little bit, test this one more time, and then we really break the daily 20 average, and then we come down and kind of test this 23% extension zone. Oh, we're going to come back up. Maybe we're going to test it again. Nope, back down. And then we even break that line. And now we're all the way back to original point of breakout, which is this level right here. That's 0%. That's because this is where we broke out back in the middle of March. So this is an important level, and I was not surprised that we held this support here. And look, not only did we hold it once, we held it twice. So hit this support level, and buyers rushed in, bought the stock up back to the 23.6% line, and then we fell back down, and now we formed, before we had a double top, now we have a double bottom. And this is what was happening in May. So this was an encouraging sign to see. So again, we broke back up, and now we've gotten above all the moving averages again, and look, the 20 is starting to curl back up. Everything's starting to move back up here. And where are we at? Well, we are back at this 61.8% Fibonacci line. So again, we're going to test this for the third time, and I would not be surprised if this coming week we contend with this line and we inevitably break it at some point, and then we head for this 78.6 line that's up here that I can barely see, which is about 349. I mentioned that was a target for me, and then from there we'll see where we go. Then you'd be looking at 100% retracements, which is all the way up to 357, which we may very well hit this month. You don't know, or maybe next month. Only time will tell. One thing I will note that we are in June, so there's an old saying, and I don't know how relevant it is anymore in the market, but they used to say this all the time, which is sell in May and go away. What that means is there's usually lower volume in the summer months. People are on vacation. Wall Street guys are not as intense as they are. Markets kind of calm down a little bit. There's not as much excitement or things to look forward to as far as business goes because everybody's in summer mode. With online trading and people working from home and everything changing so much, I don't know how much of that is still completely true, but there might just be some wisdom still in that normally you don't expect really outsized gains short of a external event in the summer, and I think that's still good wisdom to go by. So I wouldn't be surprised if we don't make huge moves the rest of the summer, and I've kind of called from the beginning that we had such an amazing run middle to end of last year and even the beginning of 2021 that I would not be surprised if we just kind of creeped higher but didn't really blow anybody away and just really consolidate a lot of this year. It actually would be a healthy thing for the markets. So I don't, nobody can predict the future, especially in stock markets. So don't listen to any investment advisor or financial professional that tells you they know what's going to happen, because they don't. They're lying to you. They're taking a guess just like everybody else, but we can make educated guesses based on history and based on technical levels and all sorts of things. And so we'll see what happens for this year. All right, I don't know if this was helpful or not, or if this really got out there, but again, I'm going to be doing, I think, market videos live, and I'm actually going to promote them the next time, so hopefully we get a little bit of a crowd. Maybe Sunday night's a good night, maybe a different night's a good night. Let me know on the comments or in the chat if you have a time or a day that would be good for you to watch and engage with. And the biggest thing that I want to do in this and get this live is to answer questions that you might have. So if we don't have anybody in the chat or asking questions, then I probably won't do this live, but I think that could be a really cool thing if we have the ability to talk, and I can ask or answer questions directly and get right to you instead of hoping that I answer your question that I didn't know you had in the video in talking about certain things. But I would say in general, the reason I'm doing all this is because I got passionate about personal finance years ago. And if you knew me before, I would like 2012, 2013, you'd be shocked that I'm doing this. Honestly, it's not something that most people would think, oh, Tim's a finance guy. And if you talk to my wife, she would tell you, yeah, Tim is the guy that I had to keep reining in for the budget and to make sure that we were not overspending, that we weren't using the credit cards. I didn't always know what was in our bank account balance. I was not paying attention to those things. And I went through Financial Peace University, which is Dave Ramsey's personal finance course, and that really changed my perception and honestly changed my life. Some people don't like Dave. That's fine. He's not for everybody, but for me, it really made a huge difference and woke me up and really set me on the track that I'm at today. And so I've been running this race for about 8 years now, and it's been a long progression. And I'm excited now to be able to work with families and to help them achieve their goals and set goals and see their what can happen when they invest their money rather than just ignoring it, sticking it in a savings account, or just hoping that things work out. Because hope is never a plan. We need hope, but we can't bank on hope for our financial future. We actually have to make decisions. And so that's why I do what I do. And so I'm happy to help out. And I promise to be making more general informational videos about retirement, about the market, about different decisions you can be making with your finances. They are work to do, but I enjoy doing them. Because I think it's really useful, and there's some good content on YouTube for personal finance, but there's not enough of it. There really can't be, because this is something that affects every single one of us. And so for me, it's been a really cool experience and an honor to be able to walk alongside of couples and families and individuals making some of the most important decisions of their life. Because my goal is that if you work with me, you have a partner in this that. And I'm not the type of advisor that's just going to say, oh, just trust me and I'll let you know once a year how your investments are doing and just don't ask any questions. That's really not my goal. My goal is to teach. My goal is to inform and to, maybe you're not going to be the most excited about the market and personal finance and your investments and your 401ks and IRAs and all that stuff. That's fine. You don't have to be excited about it, about the details of it. You should be excited about what the possibilities are, and I want to help just get you in gear and engaged with that, because if you can engage your head and your heart at the same time, that's when powerful things can happen. So you have to have a why. You have to have a reason for wanting to do this. Maybe it's your kids, maybe it's your family, maybe it's getting to send them to college debt free, maybe it's being able to buy that dream home someday, maybe it's the opportunity to retire early and make choices for yourself that you never thought you'd be able to do because you were always thought that you would just be stuck, kind of doing a 9 to 5. It's whatever it is you want to make of it, and that's the power of making smart decisions with our money. It gives us choices and freedom. Money is not an evil thing. You've probably heard this said before. I have a million times. There's nothing evil about money itself. Money just makes you more of what you already are. So if you're a generous person and you're blessed and you make wise decisions with your money, you're just going to be abundantly, extravagantly generous. If you're a stingy person and you make a lot of money, you're just going to really hold on to that and be bitter. And I'm speaking that to myself too. I struggle with that, and just realizing I need to have an open hand approach to these things. And it's really a cool thing to walk through. So I think I'm going to end this because why not? This was just a test anyway. So maybe leave me a comment and let me know what you thought, if this was a good time, if this worked, what you want to hear about, and let me know when would be maybe the best time to go live in the future, day of the week, time. That'd be good to know because I want to get a bunch of people on here if we can, and then we can chat about different things. So thanks.